Now, it's not just because of all the money that the Federal Reserve has sent in. There's another reason. Our capital markets have been moving to what is called passive index funds instead of managed money. And it's largely wrapped around ETFs. So think of it. You work for a company. You have a 401k. You put money in your 401k. That money goes off to a firm probably like BlackRock, T. Rowe, Vanguard. What do they do with that money? They're not actively managing, looking at one company versus next, one sector looking at another. They're dumping it into an ETF. Whatever basket of stocks in that ETF that gets all that money flows, those stocks are going to do well. The problem with that is there's nobody looking at and saying, does this company make sense in its value, or does this sector even make sense? It's just money on autopilot being jammed in, and it's some guy at BlackRock saying this company is in that ETF or it's not in that ETF. What's the hot ETF? Best example is the EVs, electric vehicles. So much money flooded in, helped one of the many reasons to create probably the most insane value other than AMC and GameStop, which is Tesla, valued at more than all the auto industry combined and double. In fact, they made an announcement they're going to sell 100,000 cars to Hertz, that sales will happen over like 5-6 years, and they've added $300 billion in market cap. I'm sure the CEO of GM and Ford says, we sell 100,000 cars all the time to the rental car agencies. I mean, it's crazy. But what happens, all this money flows into EVs, the more those stocks lift, the more money flows into it, the more the stocks lift, the more money flows into it. Nobody's looking going, does this make sense? So this is a big problem. I would encourage you all, even if you're having your money managed by some place like JP Morgan, a lot of their wealth management is just sticking you into these passive index funds. And it has totally distorted our capital markets and equity markets.